Welcome to The Business Behind Your Business, the podcast where we delve into the financial strategies and insights that drive success for small and medium-sized business owners. I'm your host, Paul Sweeney, and in each episode we bring you expert guests who share practical advice, real-world experiences, and actionable tips to empower you on your business journey. Whether you're a seasoned entrepreneur or just starting out, get ready to uncover the secrets to success and gain valuable insights into the business behind your business. Hello and welcome back. We are approaching the end of the year. We're looking at getting on top of our numbers for making sure that we can maximize our tax returns, maximize our profits for the end of the year. And look, a lot of the focus at the moment is focusing on end of year. We've talked about things that you can do to help with tax planning and getting the best result. But one of the key things that a lot of businesses neglect is this whole idea of keeping on top of their numbers and understanding what their financial figures actually mean. Now, we've had a bit of discussion about this in the past, and we've sort of talked around the issue, but really to get the best results for your business, you need to know what's going on in your business. And the best way of having an indication of how you are performing is to actually understand what your financial figures are telling you. So we have a few things here that I want to raise or highlight. So 5 things that you should know, the 5 things that you must know about your financial figures. So my background, I've been working with small, medium businesses for over 30 years as a chartered accountant and a tax agent, and also as a certified business advisor. So it's exciting for me because I get a lot of satisfaction when people actually understand what their financial figures tell them and then go forward and say, right, okay, now I know that, I can now understand what I've got to do to take my business to the next level, or what I've got to do to increase my profit or improve the cash flow in my business. So we're looking at those sorts of things that are coming through. So we've talked about, getting on top of your tax position, but you need to be able to do that, you've got to understand what your financial figures are saying. So there's a few things we need to look at here, and we're looking at, a lot of the time when people look at their financial figures, they're overwhelmed. They don't actually understand them. So they will just gloss over them or ignore them, or just look for the bottom line and say, well, what's the profit or what's the tax? And there's a bit of an issue with that, because the numbers can actually tell you a story, and they will tell you a story, but often not when we just look at numbers on a page or one report. What we're looking at is trends of the numbers and what do they mean. But one of the first questions we've got to ask is your information correct? And I've seen a lot of clients, a lot of business owners who don't have up-to-date financial figures, which means that the information they're working on when they print a report is obsolete, it's incomplete, it's telling them the wrong story. It's like only having half the facts or half the picture when you're doing the puzzle. You've only got half the pieces, so you can't see the full picture, what it's supposed to look like. So how do you know they're correct? And that's a key thing, because a lot of business owners are flying blind in this area. They're not having financial information to tell them how they're tracking in their business, or how much they need to improve, or how they can improve. So what we need to do then is actually focus on our better record keeping. That's the first start, and better record keeping is essential for a lot of reasons. So understanding what your tax position is, being able to substantiate what's going on in your business if you're audited, if you need to provide information to the bank for a finance application, essential. But if just tracking where you're up to with your reports, not so much with your reports, but where you're up to with your business. How is it tracking? You might have set goals. So we've talked about business planning. We've talked about forecasting. How do we know that we're actually meeting those goals? So that's where our financial records come through. And it's very important to have that accurate picture, because if you don't have an accurate picture, then you're working off the wrong information. You're going to end up in the wrong spot, or you're making decisions that are not going to be correct because the information you're using to make those decisions is false, or there's errors there. So we need to make sure we've got some accurate records in place. And we're talking about financial planning decisions, or preparing your tax returns, audits, dealing with bank. But I guess the more important thing for me is that you actually understand how your business is tracking, that you've got a very good picture And then you understand exactly how profitable you are and where you need to make changes. And the more accurate and the more up-to-date that your records are, it's easier to make those changes. It's easier to identify when you need to make changes and identify the impact of those changes. So that's a really important thing for us to keep track of. So we talked about some of the essential systems, and back in it seems like a long time ago, back in our 52nd episode, Paul Cripps and I were talking about the 3 essential tools that every business needs, and we're focusing on the accounting software, CRM, so customer relationship management, and sales tools as being 3 essential pieces. Now, we might go back and revisit that topic, particularly around the accounting side, but or the sales side, because sales is a big focus. How do we increase our sales? But those 3 pieces of software are essential tools for any business. So accounting software, which probably includes your payroll, will help with your taxation and your financial reporting, your customer relationship management software, and that might incorporate into a database, or it might be part of your accounting software, but best to have that separate, and your sales tool. So where do you make your sales? What's the tool that helps you make sales and invoice your customers and get paid? So what are those things that we are looking at there? So 5 key things that your financial records need to tell you about. So those 5 key things are essentially profit, revenue, your net cash flow, inventory, and debtors. Now, inventory, I'm going to say there's a little caveat there. Not everybody has physical stock, but you do have inventory, and I'm going to explain that as well. So the 5 things there: profit, revenue, net cash flow, inventory, and debtors are the 5 key things that we're going to look at. So what we're looking at is, what is profit? What is profit all about? So profit is simply what's left over from your revenue and when you deduct your expenses. So that's what we need to know, and your financial records will tell you that. So here's, looking at an example, we've got our sales revenue, or our service revenue from services, the cost to produce that revenue, and then that's what we call our gross profit. So the result there is our gross profit. Important to know that. Are we actually making a profit there? And then what are our overheads, or our fixed costs? So the costs that don't change depending on how much activity we do. And there are things often like wages, salaries, rent, overheads like electricity, internet costs, etc. They don't generally change. So there's an amount of fixed costs that we need to cover. It's important to know that your gross profit is covering that each time, and we need to increase the gross profit. So focusing on the gross profit there is important. Now, important to have accurate records. So get your financial reports from your accounting system. So Xero is a great one, because a lot of the data, a lot of the accounting is done in the background, and I think a lot more of the modern accounting systems are designed for business owners, so you don't actually have to understand the accounting, and the tools and controls are in there, so you make less errors. So if we go back 20, 30 years ago, a lot of the accounting packages sold to small business owners didn't have those controls and checks in places, and business owners got into a lot of trouble with inaccurate records and putting things in the wrong spot. We've come a long way since then. So looking at profit and loss statement, though, is a key report to grab from your financial statements. So profit and loss, and we're looking at, importantly, what's the gross profit? Is it covering your overheads, your fixed expenses? And if it's not, then we need to look at, well, obviously your sales level is too low, or your level of sales is too low, or maybe you're actually running a lot more expenses as fixed costs than you should be. Maybe you need to trim that back a bit. So focusing on those things. So profit and loss is a key indicator to tell you, are you actually making a profit? Okay, because it's not just a profit on I've sold 100 units and it's at $1,000 each, so $100,000, and it's cost me $50,000 to buy them. So I've made a profit of $50,000, but does that $50,000 actually cover all of your overhead costs, like your rent, your wages, your utilities? Important to make sure that that is the case. So the next thing we want to focus on here is our cash flow. Our cash flow is important, and a lot of traditional accounting reports didn't actually focus on cash flow. So cash flow is what's important. It's available for what cash is available to pay your expenses on an ongoing basis. So we're looking at a few things here in terms of what is the cash, where's it coming from? And a lot of the time, cash is different to profit because you might not get paid by your customer at the same time that you invoice. Ideally, we'd love to be paid as soon as we issue an invoice, but that's not always the case. And so often we have differences there, and we might pay for a piece of equipment but not have the expense coming through. We might be depreciating that piece of equipment over 5 years or 10 years. So we've paid for the equipment, but we're not getting the expense. So the profit is going to be different. And generally, you can now run what we call a statement of cash flows or direct cash flow report from your accounting system, which shows your operating activities. So is your activity or your sales activity or your business activity actually generating a profit before you start spending on investment activities like new equipment or finance repayments? It separates out those three things because a lot of people get confused because the profit and loss is saying one figure, but the bank account is saying a different figure. So we need to know, where is the cash going? Is it being generated by operating, but you're pulling it out as a drawing, as an owner's drawing or a dividend? If that's the case, then we need to say, well, hang on, what is the level that I can safely draw out before I'm reducing my bank balance? So a lot of cash flow management comes into play there. So we can also look at a lot of the tools now, a lot of the systems for accounting for small business actually have in some forecasting tools, which are very helpful to have a look at. And they can, based on your spending and your expenses, that the bills that you've got entered into the system and the invoices you've raised with customers that haven't been paid, it can do a bit of projection going forward about where you're up to, what expenses you've got going out, what cash expenses you've got going out, what cash you're anticipating coming in, and can give you an idea of what the forward position is going to be for your cash. And that's really important to have in place. So cash flow is really important. Now, I skipped over one, which is, I want to spend a little bit more time on it, and it's possibly the one thing that most people, it is really the focus. It's what drives your profitability at the end of the day, and that's revenue. And revenue is crucial because without revenue, we don't have a viable business. So revenue, we're looking at things like sales and service income, and that's the key thing there. Now, revenue is really important, and we can increase our revenue by focusing on the number of customers we've got, how many sales transactions, and the value of each sale. And by increasing any one of those three variables, we're going to increase the revenue, and hopefully we're managing the cost of producing that revenue, so our gross profit is increasing. So we increase our revenue, and we can do that by focusing on one of three things: increasing our customers, increasing the number of transactions, sales transactions, so getting customers to come back to us and repeat, buy more, and then increasing the value of sales. And we've talked about that in some past episodes as well. So revenue is a key thing that we want to focus on, and that revenue drives profit and cash flow. So revenue is the key thing here. Revenue is what drives our profitability. Revenue is also what drives our cash flow. So we need to focus on revenue. So in all the things that we are focusing on out of these figures, revenue is the most critical. But at the same time, we want to make sure that we've got revenue where we're getting paid. We don't want to keep selling to a customer that's not paying us. So we want to make sure that we get paid, but at the same time, we want to increase revenue. When we increase revenue, we're increasing our profit, our gross profit. We're increasing our net profit because we're selling more than our costs. Okay, and that's the aim of being in business. So, talked about the fourth figure I want you to focus on when you're looking at your financial records or trying to understand them, is what we call inventory. Now, immediately when we talk about inventory, we're going to focus on physical products here. When I talk about inventory or stock, the first thing that comes to mind is a physical product. Now, that is not always the case, because what we have as well is your time. If you are providing services, then you have a limited capacity of time. So having a look at how much time do I have available to deliver product services to my customers, that is actually a measure of your inventory. So looking at, okay, if I have 40 hours available this week, how much am I selling? But in that 40 hours, I might not have the ability to deliver 40 hours of productive work. I might only have the ability to deliver 25. So we're looking at the capacity of our business. How much can we produce based on what resources we have available to us? So one way would be to sell more using the same amount of available resources. Our inventory or our stock is looking at, well, can we charge more for what we do? Can we charge more for what we do? Can we be more efficient? Can we actually get the work done faster? And this is where we start to tap into tools like AI and a lot of the software tools available to us to help us achieve the end result faster. Okay, at the end of the day, the value to our customer is still the same, but if we can produce that work more efficiently, then it increases our available resources and also increases the price at which we're selling. The price in selling terms, in terms of our available resources. So if we're able to produce twice as much content in those 25 hours, then we've actually got we're doubling our capacity. So focusing on how much inventory you have available is an important thing, and also how much you're using that inventory. Are you getting a good return on it? So if we're talking about physical stock, are we actually purchasing more stock than we need that we can't sell? It's quite common for business owners to buy in bulk, believing that they're going to be able to sell it quickly and end up with huge stockpiles of inventory sitting in a warehouse or a storage facility, not moving. It gets spoiled and then it gets out of date and then it can't be sold at all. So be mindful of how much inventory you've got. One of the reports that we would often consider looking at when we're looking at inventory is this thing called stock turnover. So how many times a year are you turning over your stock? Focusing on that because stock turnover is important, because if we're not turning over our stock regularly, then we've got too much on hand. We're not selling it. And we want to not be in a position where we're stockpiling large amounts of inventory, physical inventory, that we can't sell, and that's going to not be able to sell at the full price, or we're not going to be able to sell at all, and we've expended all this money. We've also expended all the cash to purchase that inventory, which is not a good thing. So we need to keep an eye on what items are actually turning over quickly and focus on perhaps selling more of those items. So there's another tip there. Now, debtors, we're talking about cash flow, and debtors, accounts receivable, it's another key thing that we are focusing on here as a business owner, because we don't want to be in a position where we are making sales but not getting paid for it. And this has been a trap for a lot of smaller businesses dealing with large companies, larger businesses, or maybe even government in the past. And I know the Australian government has made a lot of efforts to make sure it is paying its small, medium business suppliers on a faster rate. But a lot of the time, larger companies take advantage of small companies and extend those payment dates from what might be your terms of 14 days. It might actually come out to 28 days or even 60 days, which is not good. And this is where we come back to our cash flow monitoring being crucial. Because if we're making sales but not getting paid, we've got a cash flow issue that we need to address. And the faster we get paid, the better our cash flow is going to be. So we need to keep a regular review of what is showing as outstanding. So we need to run that debtors listing or that age receivables listing on a regular basis and make sure that we are following up those customers that have not paid you. Okay, follow up the customers that have not paid you. And the reason is that if we don't follow them up, you're not going to be front of mind. But also, the longer you leave a debt, the harder it is to collect. So we want to make sure that we are actually focusing on collecting those debts, making sure they don't become old, getting paid on your terms. Okay, so follow them up. So make sure that you are regularly reviewing the list of customers who have debts outstanding to you and follow them up. That's a really important thing to focus on with your debt collection. So monitoring your results, very important. You've got to get on top of your figures. You need to keep them up to date. You need to understand. You need to monitor how you're going from month to month, from week to week, from quarter to quarter. So keep a track of that. So a lot of your financial systems now, your Xeros, your QuickBooks, FreshBooks, I believe, they will now allow you to run comparative profit and loss figures. So you can see the difference between this month and last month, or this month and the same time last year. So that gives you a story of how well you are progressing. Are you improving from the same position last month or last year? Okay. Looking at it in perspective in terms of, how are we moving forward? Are we actually improving or are we going backwards? Why did sales decline in this period? Is it just that sales declines every January for us? And if so, then we need to actually have a look at, what are our costs going to be and make sure we've got cash available? Or is it a case that something weird happened in that month, or did we get a new competitor start up and they're selling at a discount? Is that affecting our sales? So use your the available financial reports. So run your profit and loss, but do the comparisons in there. Have a look at what are the differences between period to period, or even period to, if you've been diligent and done your forecasting and budgets, what your forecast results were for that period. Important to keep a track of that. So your financial results are your scorecard. They tell you how you've been going, which means that you can then act on that to make changes going forward. So very important to keep on top of your financial figures. Very important to make sure that that you do keep on top of your financial figures. Understand what your reports are, but make sure they're accurate. So if you if you haven't already, then it's time to start using an accounting software package designed for small business. So start using a Xero or a QuickBooks or something similar, and make sure that your data is there, it's being recorded daily, it's accurate, it's up to date, and gives you the ability to print those financial results so that you can quickly determine, have you made a profit? How is your cash flow? What is your tax obligation? What GST do you owe? What wages do you owe? Make sure that you've got that in place, because that's really important. So important to keep on top of that. Make sure you've got good systems in place so that you can actually have the data there, and then make sure you're running the reports and understanding what's involved. So if you're looking for past episodes or resources, then they're always available on our website at thebusinessbehindyourbusiness.com. And look, we love getting questions from our customers, from our listeners who are our customers in a way. Not that it's a free resource available to you, but we want to know the questions that you have or what you need help with, and we will try and get that answered for you on a future episode coming up. Very important for us that we are providing content, getting the guests in the studio that going to answer the questions that you have. So we'd love to hear from you. And as always, we want you to create and grow a great business. So hopefully, by being on top of your numbers, knowing exactly where you are, you're in a position to move forward, or you can identify that you do need to make some changes, and you can then make those changes from an informed position, which is going to help you, smash those goals going forward. So that's all from me today. Have a great business. That's a wrap for this episode of The Business Behind Your Business. We hope you found today's discussion insightful and valuable for your business journey. Before we go, don't forget to subscribe to our podcast on your favourite platform. Share it with fellow business owners who could benefit, and send in your burning questions, because we love hearing from you. Missed any of our previous episodes or looking for additional resources to help grow your business? Head over to our website at thebusinessbehindyourbusiness.com. There you'll find our full archive of past episodes, along with show notes, transcripts, and links to valuable resources mentioned in each episode. Your journey to business success continues at thebusinessbehindyourbusiness.com. Until next time, stay inspired, stay informed, and keep building the business of your dreams.